It'll be better that you've got your questions and we will just click on the recording button. Okay. All right, guys. Thank you for waiting. Thank you for your patience as well. We just got some issues again with the GoToWebinar, GoToMeeting, and want to welcome you guys. Thank you for attending this webinar. Today is the 3rd of August 2016, and yes, it's Wednesday's live webinar. So we'll go straight to the question Sugu has posted about the market outlook on Euro USD. Okay, especially on Euro in general. It's more like how do I actually say this? You know, we as retail traders, we look into Euro and then we look into our chart. We look into the trend, and then we also listen to news, right? And we listen to news and we listen to Bloomberg, and Bloomberg tells us about some things that are happening, and then we see whether it's negative news, and then it's negative to the Euro, so we want to sell the Euro. But behind all the things that the retail traders are doing, there is something called a real money. Okay, real money trading are usually done by the bigger boys, all these big banks and all that. They do a different type of trading because they have to do trading behind the scenes. These are done by hedge funds and all these big boys. They do it, and they have to balance their books, and they have to trade the way that could bring them money. Okay, so they can actually create the trend if they want. So now what's happening is you are looking at Euro USD on a 1-hour chart, for example, and yes, I mean, initially, let us do this. Let us go on and have a bit of a outlook of Euro USD on a 1-hour chart by zooming out. Okay, so now when you zoom out, I mean, for me as well, if I look into this, what has happened, we have got this area here, and this area here has been I mean, in terms of the angle of how it has gone up, it's showing some form of uptrend movement, okay, from this area onwards. If you go on to 15 minutes, let's say, or 5 minutes, and then we look into this one here, then most traders would say, oh, it's a downtrend, but how come it is actually an uptrend? That if you're looking at the 5 minutes chart, you're looking at a very short period or short term, or even scalping trade. Maybe scalping would be much lesser in time frame, but it's short term. Okay, the very short term. Now this is what's going on now between the 5 minutes and the 1 minute chart. Okay, but in looking at it as a market outlook overall, you would need to go to the 1-hour chart, okay, the 4-hour chart, as well as the daily. Okay, even better if you can also go on to the weekly and the monthly, just to take a look at what's going on. But before that, you would need to zoom out as best as you can, okay, until the maximum, like this. Okay, and let's say if I go on to the 1-hour chart, and I could see that I've got my 3 moving averages at the moment. Now you do see a downtrend at the moment here, okay, but you've got higher highs and higher lows. This one here that has actually come down, this price here, as you can see, if I zoom in a little bit, you could see that it's coming downwards and it's actually pierced through, okay, pierced through the 50, and then it's aiming at the 100, and that's 200 is far away down here. But look at the price on the right. The price on the right is 1.1177. Okay, so 1.1177, if you're looking at a downtrend movement more, we need to wait till prices go under 1170 and below. Okay, but even if it goes under 110, it will have to break this area here at 1150 area as well, because the 1150 area is the 100 exponential moving average area. So look at how many layers, like a cake. Okay, it's got 1, 2, and 3. It has actually gone through or pierced through the first level, the first what do you call that, the first layer of the cake. It's got the second layer and the third layer for it to go through. Okay, now going through these levels are not as easy. If they have no levels to go through, then the prices can actually just fall a little bit easier. But if it's got levels, it might it might try to challenge it, and then it might actually wait, create some sideways trend and all this kind of thing. Okay, because the other thing as well is that if the 100 moving average here, it's at 1158, so that is the 50 area. So now what is happening now, to summarize Euro USD, if at all it actually falls, it would actually fall and fall, and then you would need to wait until it goes under the 70. If it does go under the 70, it will start to play around the 50 area, the 1150 area. Okay, it may bounce through that, or it may bounce off from there, or it might go through. Now at this stage, because when we have a lot of many obstacles along the way, and we've got psychological number to think of and everything, it starts to create uncertainty first. So it's not a nice time for you to be confident of a trend, because the prices for Euro USD has gone inside the territory of uncertainty. Okay, now let me remind you, if you have prices coming in and playing in between these three lines, okay, in between the three lines, anyway in between the three lines, it's not under the three lines or not above the three lines, then it is not a momentum type trend. Okay, it is not clear. It's going into, now it's going into uncertainty mode already. The uncertainty started to go in. Okay, that means investors are beginning to feel a little uncertain, not sure, or they are planning something, or they are waiting for something. So the buy may be slowing down. Okay, the buying is slowing down. There may be a correction, maybe a change of trend. We don't know just yet. Okay, but we are looking at this, and then let's say if you want to get a better picture of the power of candles and whether the candles are able to give you a story, you could see that what's happening now on the 5 minutes chart, for example, you have longish candle. You got a lot of selling power. Okay, and it has managed to get prices under all the three lines. Okay, so when you zoom out a little bit, now this is a downward move, correct? Now when you need to make up a story when you're actually trading. You have prices going down. Okay, when prices are going down, you need to ask yourself, look to the left. Look to the left. Where has prices started to go up? Where did the market started to think and then it shot up? You see, market start to think a little bit sideways, but then here it shot up, correct? So in this area, it may be a significant support area. So it's good that you know prices is coming down now, but then you need to always look to the left and see what are the challenges. Okay, the challenges. Now the challenges of when market went up instead, what are the opposite things that have actually happened close to this level? And as you can see, this is a significant support area, because from this level it bounced up quite high, and it's quite a significant move, even though if it is on a 5 minutes chart. Okay, so it has caused a bounce off and a sort of change of trend, okay, before it come down again all the way here. So there is an area that you would need to be aware of. You need to be aware of this area, because there's some thinking going on, but then price shot up. Okay, so it is also a good idea for you to understand that this may be a support area coming very soon. So it is time for you to draw a support resistance zone. Okay, it's safer for you to do that. Let me just clear off all this, erase. Yeah, so now here, let me just, okay, now this is like a cup pattern going on here, Euro USD. Okay, a big cup here. Right now, a cup pattern, this is a 5 minute chart. Of course, we will look into 1 hour and then we look into daily. Now it will start to go up, create a channel up, but an upside down pattern usually indicates more downward move trend. Okay, but let us focus on this area now. Let's say, okay, I would like to focus on this area here, because this is where there's some significant support going upwards, and that is closest to the price now. So now I can zoom in a little bit. When you ready to draw a sort of support resistance zone, then you zoom in. But before that, if you zoom out, you give you a sort of a big picture what's going on. So look at this concentrated area here. Now look at this candle here. This candle came downwards like a needle here. That means it rejected. When you have a long candle, a long what do you call that, a needle, okay, and that needle or the wick is bigger than the body, that shows you the rejection direction. The direction that it rejected was actually the downside, so it couldn't go down so much. That's why it gave you only the long candle, only the long wick or the long needle. The long needle down shows you that it's rejecting going down. The long needle up like this here is telling you that it couldn't go up so much more. So that was the time that it tried to go up, couldn't, it rejected going up. So that's why it fell a little bit. Okay, it fell down here. So the same goes for this one. This one is where it rejected. So what you do is that you can draw a sort of based on this candle here, you can, okay, and I will draw one based on that one there, okay, on the body of this needle-like candle here. Okay, that's my zone, because I can see that prices is in between the zone again now. Okay, that is why you see that it's unpredictable. You're not sure what is it doing. Will it actually break up or break down? We don't know that yet, but this is a powerful or a significant support area at this area. But it's best for us to consider an upward move only if it goes above this green line above. Okay, I can draw another zone within the zone, because here I've got this candle and body and this candle's wick. So you can see prices, the white line is still trading in between that zone. So now I'll take this one up here so you can see that the price, okay, this is what's happening on a 5 minutes chart, by the way, okay, just to show you. So you can see now that this zone here is what's going on. Okay, so I'm going to draw based on the 5 minute chart now what's going on now, okay, is this prices is in between the zone. Okay, it's quite a strong, quite a significant support zone, but it looks like prices is actually trying its best to go under that zone. So this is a strong support zone, but if prices manage to pierce through and come under it, and then you can see a lot of bearish candle coming down, then the trend is continuing to the downside based on this one here, because now it's downside, it's continuing to come down to go down again. Okay, so here if I zoom in, you can see that yes, indeed there seem to be more pressure to the downside. This is based on the 5 minutes chart. Okay, so if I go to the 1 hour chart, let's see what we can then see. Okay, now on the 1 hour chart, that U cup here became smaller. Okay, and yes, indeed you see that there is a longish candle here. It's trying to pierce through, already pierced through the 50 moving average. Now you would need to wait until it pierces through this zone that I've colored it in blue. If it does, what happened is that it would actually then come down more, but this is the next challenge here at the 1150 area here. Okay, so now it is at that price there, and then you will see that if it does come down more, it will challenge that area, bounce off there. If not, then it will come down a bit more. If it does go through that 100, then you've got more likelihood for it to reach this area here. Okay, so I just want to look at whether or not we have some sort of pattern now. Here, for example, let's just see, we have got a there may be a potential. Let me just pull this move all the way up. This is based on the 1 hour chart now. Earlier on we looked at the 5 minutes chart and the 5 minute chart. Now we're looking at the 1 hour chart. Okay, I just want to look at whether or not I can I can spot any other patterns or not. Okay, so let's say I have all the way, oops, down here, let's say. Don't know why. Let me just perhaps use this one here. Give me a second. Now let's say that one and that one there. Okay, I'm just looking at whether I have a chance of a Z-like pattern. Okay, now here on a 1 hour chart there may be a potential for price, if at all, go through this zone as well, then there is a potential for it to go down quite a bit. 1106, this is based on chart patterns. Okay, based on chart patterns I can see there may be a chance. I'll just draw out the Z pattern for you. This is for the Euro USD. Now the banks and the big boys, when I send signals or trade ideas via banks, they are usually aiming at 500 to 1000 pips and all that, and that's usually from 4 hour chart and above anyway. What that means is that that would be more on medium to longer term if it's coming from the banks, because the banks don't actually play little pips, you know, they go for a big shot pips. So based on that, they are showing uptrend potential. So that is on the longer term. So now us as retail traders, we want to trade now. We want to know what's going on. From what I can see, Euro USD 1 hour chart, there may be a correction coming down, and the correction meaning it's on the, there may be a chance to sell. Okay, but let's look first, how do we plan selling it? Okay, so here let me just do that. I just want to draw out the pattern that I could spot just now first. Okay, I don't want to follow the bank saying, oh, uptrend and enter and then just buy. I just want to make sure that what I see as well matches with what I read. Now here it doesn't give me any, you know, good ratio in terms of the pattern, but because it's looking like it's coming downwards quite strong. So if it does come down, usually in a Z-like pattern like this, it could come down to the level of 50% here. Okay, so we have two zones. Now that looks like it's really far for it to come down, but we need to be careful with this one here. We need to trade in stages, so I would then look into how whether this downside move or candle could beat or overtake some support area. Okay, can you see that this is a support area here? Okay, here we've got candles playing around and then it went up. Yeah, so I would like to mark the area where it started to, you know, burst through upwards. Okay, this is a candle here. Here it started, you've got a support going upwards here. Okay, so if I use that body there of where it started the uptrend, then I get a bit of an indication of where prices has to come through, and that may cause it to bounce. So the downtrend candle now needs to pass through that 1164, but 1164 is just too close to 1150, so might as well you make that at the 1150 area. Okay, as an area to watch out for. Okay, that means 1150, it needs prices to go under 1150 based on the psychological number. So there's still some space, you see, 1150, because it goes down, and these are areas where it might bounce up from, or even earlier. Maybe at 1160 it'll start to you know, bounce up. So we'll still keep this area here. Okay, so between 1164 and 1150, need to watch out for that area, because prices may just, you know, come down, bounce up from there, or come down more and then come down even more. If it does, then you've got this two line area here as your TP area for a sell. Okay, so now what you would need to do is to make sure that you wait till prices go through that psych number first to give you a better indication that it is definitely good to sell for now. Okay, so you would need to be careful and look at price for this moment of time. So this is for the Euro USD. When I go into the 4 hour chart, I could see that you know, it's still on the upside move, so it may be a correction, maybe the thing that is happening now, it's a correction. Okay, but look at this one here. We have something like this here, which I have drawn and sent you guys to Telegram. Okay, you've got ABCD here that seem to have actually corrected quite nicely at this area here. Okay, and that if you put the AB equals CD, then you get, oh, that's AB, let's say, right? And CD is here. Okay, so you could see that it turned around there. Okay, so this AB, you can draw your ABCD here even. It's not a very nice one because the B to C, you see it's very broad. Okay, but it still counts. So you've got an ABCD like this. Okay, but if you look to your left, you've got a big move down. Okay, so that move down could easily be a W as well. So you've got a W like pattern, that's why it moves around there, but let's ignore this W for the time being. Okay, so you have got a chance for it to come downwards. Now this line here, this thick line I've drawn, is based on the pattern as well that I have drawn earlier. Okay, so this thick line is quite significant. Sorry about that. Now it's on the way down due to the W-like pattern as well. So yes, to answer Sugu's question earlier on, you know, whether or not it's a change of trend to the upside, not really. I mean, it's just the real money big boys is trying to push the carry trading and all that up, so they are trying to make a bit of a trend to the upside. But you trading as in stages now, you can see that you've got potential to the downside still. Okay, but you need to look into all these obstacles as well, like I've mentioned earlier on. Maybe you want to use the neutral 1 hour chart to trade in stages, but look at the prices and the levels as well. Draw your levels properly. Okay, Zifo has got a question. Can you clarify the Fib ratios involved in W and M pattern from XABC? Okay, and D. Okay, hyper confirm. X should be okay. Yes, I can. All right, we will use an example, but I'm just going to be brief, okay, because it's an entire module. I'm actually planning to restart the certification program again, exactly on the geometric trading, on the M and Ws and all that as well, on the exact Fibonacci ratios. But let's say your X basically, okay, if you draw an X here, okay, let's say you've got A, B, and then your C and D, and you want to draw your X here, okay, you could draw the X point is the only point that you can change. Okay, you can draw your X here, you can draw your X here, you can draw your X here. You can actually choose any X point you want as long as it is higher than the projected D point area. Okay, if it is like very low here, then that is lower than this area. It's not a very high probability, but when you want to choose here or here, actually you don't just choose like that according to yourself. You need to use your friend Fibonacci. You need Fibonacci to tell you where would be nice for you to have the X at. Okay, so for example, if I pull, when I pull my X to A, I need to make sure that my B as well hits a very nice Fibonacci area. If it hits that Fibonacci area, I don't need to adjust anything. Let's say if I pull from here, let's say I choose this as my X and I pull it to A, correct? Let me quickly look at my B. The B, it's not too bad here. You know, it's at, see the B, based on the yellow line, it's close to 50. Okay, not too bad. So that's all right. I will leave that. But let's say if my B is hanging in between two Fibonacci level, then I can just adjust. I adjust and look for any peak as my X until my how do you call that? My B hits a nice Fibonacci ratio. I can even choose here if I want, and that hits quite, you know, not close. You see 61.8, but here it's closest to 50, and it's not too bad. Okay, so that's why I can choose that as my X. So the X can move. You can move your X as long as it's higher than the D projected D point, but you want to adjust your X until the B point, okay, hits one of a nice Fibonacci ratio like the 61.8 or the 78.6, like that. Okay, we will use some more examples in a bit so that I can show you what I mean, okay, a bit more. Now at this moment of time, let's do the Euro USD again so that we can get some trade ideas. I mean, at this stage you want to make sure that because you are too close at the moment in terms of price, Euro USD on a 1 hour chart is too close to the 1.1180 psych number. It is actually a very powerful, significant psychological level as well. Okay, so that's why you see that the body of the candle still going up, going down, but it has put the low of the price, the wick here, okay, at this area. So it needs to go under 80, at least to the 70 and lower, to give you some confidence that it is still on the way down. If not, what would happen is that it might just bounce up. We don't know that, you know, whether it would bounce up or not. It does depend on the candle as well here. Okay, so let me check again, Zifo. No problem. Okay, we'll go through again maybe another W or another M pattern, but usually I start any W or M pattern, the base of any one pattern is the ABCD. Okay, especially for the M and the W patterns, the base is the ABCD. You draw the ABCD first, and then you look to the left or you look to the right. You see the big movement, usually to the left. Then you see whether it's a big movement down, okay, or a big movement up. Big movement down, that means you are looking at a bullish ABCD, and then the next to it is a bullish, it's a big movement down. So that makes out a W pattern, and then vice versa for the M pattern. But we'll go through that. Okay, so we have got 4 hour chart again. So this is for the Euro USD. I just want you at this stage, because I don't see clear enough pattern, it's best to trade in stages for Euro USD, but very important to look to the right for the price first. It needs to cross under 80, go under 70, and then give you longish candle. Only then you have got more signal to the downside. Okay, because here you see, you look left, there is the resistance here. So you never know, this resistance area might become support here, but we don't know that until it breaks through that zone that I have colored in blue first. Let's just wait. Okay, if not, we will be disappointed later on, you know, because it might just take you out. So that's for Euro USD. Okay, hope that is clear. Okay, for Euro USD. Now what's going on to pound? What's going on with pound? Now pound, GBP USD, as I've mentioned to you guys, I see some patterns as I have drawn here. I still look into the possibility to the upside. Okay, let's see. Clear, thank you, Sugu. Okay. I still see an upside move. I mean, most traders, they have put a sell on the GBP USD, okay? Because we cannot really listen too much on media, because media has been programming us to believe it's a down, 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 down for pound. I'm not saying that they may be wrong, they may be right, they may be wrong, we don't know that, but we need to confirm on our own as well. I like using patterns as well. This is what you could see in yellow is a Z-like pattern predicting this area here to be a take profit zone, and then I've got an ABCD pattern here predicting almost the same area as well for it to go up to. Okay, but now prices have gone. This is the 4 hour chart. Let me go to the 1 hour chart. Okay, I'll zoom in a little bit. You can see there's a significant move up. Okay, so they are relevant. They are relevant strength for the pound. Pound has actually appreciated quite a lot. Now this is the zone that I have actually drawn with the two lines here. As you can see, 1.3270 area right up to the 3301 area. Okay, or 00 area. Now this is where we have a significant resistance area here marked by a candle here. So this zone is quite a significant zone here. Okay, but what prices has done is it went through that zone, come back, and then went up, but then it's coming back again, and it found support now here as well. So this is an indication for me that there's still room to go upwards. Okay, even though it went down here, but here you see this this candle's wick here has actually made this area at 3301 area as a support while it was a significant resistance before. So this is quite a significant area. What we need to do now is to still, again, even for GBP USD, to wait a little bit more to look at prices going above the 20 area. Why 20? Look at the price now, 3313. 3313, 3314 is just between 6 to 7 pips away from the 20 psychological number. So what is best for us to do is to just wait and see whether or not prices appreciate further. If it does appreciate further and go above 3320, like 33330, and then you see longer candle to the upside, then you know that it has made this area or zone as your support and it's just waiting for the time to bounce up even more. Okay, if it does bounce up even more, then I will be smiling as well because my own position is on the buy side too. Okay, so this is something that I see through the patterns. Okay, now through the patterns, this is what I can see, and even from the start, from this area here, I have already started buying somewhere in the middle here, maybe around this area here. Okay, and the majority has been selling, but this was the point as of last week that I have mentioned to you guys, that majority of traders were still selling since last week, but then I can see higher lows, okay, and higher highs slowly creeping, and then as we seen it yesterday, loads of movement up. So GBP is trying to trick us a little bit, where it's trying to make this slow and sneaky move up, but it's not showing off too much. Okay, this is going on with pound at the moment. It's not giving you the confidence to think that it will make big moves. When it does make it, it'll make medium type move like this, not like too huge, but this is significant already. This is quite a significant move here. Okay, and then it came back to create this this support area at a very significant resistance area. So this is actually a very big sign. What I mean by that is that it starts to come down, it created support here and went up, right? But it went up at the zone where most of the prices for pound has actually fallen. So you see prices fallen here, prices fallen here, prices fallen here, there's more falling of prices here. So this zone is a falling zone. It's a price where there is a zone where prices have or have fallen in the past. Okay, but if prices starting now to create a support from a falling zone, that is quite a significant area. That gives us a bit of a signal there are potential to the upside. Okay, but we just don't know that yet. We want to wait a little bit from the prices perspective at 3330 at least for it to give us a bit of confidence. Okay, no problem, Sugu. Have a good night. Okay, I will yeah, we'll get in touch again. No problem. Thank you. Okay, so here we have got as I've mentioned with the pound, we need to take it in stages. Okay, because we, you know, it's going to be painful experience if we don't trade it in stages and we just trade following what the news are saying straight away. You know, I mean, a lot of most of the websites and the media, they're talking about all this selling off and still going bearish and still going bearish. Yes, it is. It's got some bearish areas where, you know, got correction and all that. But now we have seen some appreciation of price here. But again, we never know. Maybe it cuts through this area, okay, and then it comes under here, and then the whole trend starts to change again. Okay, so but here this is where we need to be careful and looking at price. Look at what's going on now itself. As you can see, they have got this candle here. I wouldn't say that this is a nice rejection candle. Rejection candle looks something like this with a smaller body, okay, where you've got a very long wick, long needle but smaller body, and that is what we call a rejection type candle. Okay, a candle that like this one here, you got smaller body, you got longer there, and it's just failing to go up, let's say, or going down if the needle is pointing downwards. Depending on where the needle of the candle is pointing up to, if it is bigger or longer than the body, that is a sort of a rejection candle. Okay, here you got a bit of rejection. If you've got a lot of if you've got many needle to the upside pointing up, that means it's telling you that it's not able to go up more. So that is why you get big movement coming down after that. Okay, so here I'm still stubborn in thinking that there are potential for it to reach there, but I've got obstacles meaning areas to watch out for. I mean, if it does go up from this area, I've got the 200 EMA, and then if I look left, I've got that resistant area there. I look left again, I've got another resistant area there. Okay, this is a very nice rejection candle here to show you the potential change of trend here. Okay, so you can see you could hardly see the body or not much body to the whole structure, but you've got a longer tail going upwards. The longer the tail, the more it's telling you how much it doesn't want to go up. Okay, the body of the candle may do not have enough power to go up, so it's being rejected to go up more. Okay, so hence the reason we had this very big fall here, see, all the way down. Okay, so you want to look at rejection candles, and you want to make sure sometime at the peak or the valley you will find this rejection type candle to indicate to you a change of trend. Okay, so look at the price. 3330 would be an area I would like to look at for going up further. But when you take this crosshair here and you go onto the area close to the 200 area, you could see that the 200 area, it's really close to the 450 area, but that is far away anyway. Okay, because we're looking at a 4-hour chart. So 3330 is a price for an ideal buy for the GBP USD, again, if at all it reaches there, because now you're looking at correction. We want to look at where prices can bounce up from. Okay, very important. Where could it potentially bounce up from? Okay, will it bounce up from this area, or it go lower and then bounce off, or it will not bounce off so much and then start going downward? That means there that could also signal that the pattern that I have seen may have failed. At this moment, the pattern has not failed yet. Okay, because it has not come under and then go under all this line, this thick line you can see goes under there, and more bearish candle. Then I could say that both the Z and the ABCD have actually failed. For this, at this time, from how the prices are still playing, it has not failed the pattern as yet. Okay, there may be room for the upside, but I'm not saying that there may be room on the upside and it's definitely going to go up there. No, I'm not saying that, and I'm not also saying that you can just click the button now and then just trade a buy. No, I'm not saying that either. So you would need to be very careful in terms of what price you would like to enter. As I've mentioned, 1.3330 would be an ideal short-term trade. Maybe you take another 40 or something pips. Trade in stages, okay, and then you enter, and then you look at the market again and look for any extra built on patterns as well. Okay, so that's the GBP USD. I know it's not that easy for us to just know what is going on, because it's just too many geopolitics, especially politics side of it. Okay, now for those who are trading a GBP JPY, now here I would like to just give you a hint. For the GBP JPY, it's a little easier to not easier to predict, easier to have an idea, because of combining a currency that has a lot of chances going up, like the yen. So the yen, because of all this money coming in, stimulus has been approved and all this kind of stuff, it could only boost that movement to the upside for yen, and hence the reason we have got more move to the downside predicted. Now I would like to show you something on the GBP JPY now on the 1-hour chart here. This area here, we have got a rejection candle. What that means is prices went up a little bit with this candle, bullish candle again went up, and it rejected with a candle upwards. That means it's rejecting, and it's rejected close to that 200 moving average as well. So there may be a potential. The slant down as well, that means it's a slant down, a favor to the downside as well. So here we have, for example, look, you've got a very thin body here, like almost no body in this candle here. When prices went up and then it made this long candle, a long wick, long needle like structure, it's giving us a clue or a hint saying that it may reverse because it tried to go all the way up. It points up with a long wick or needle, but then it cannot go up further. Hence the reason you see that fall. Okay, so that fall may be a significant fall to the downside. Okay, you're looking at more room to the downside potentially. But as we zoom out GBP, JPY, you could see it started to, correct, but then it's on the way down again. When you go into the 4-hour chart, candles are quite, how do you call that, quite far away from the 3 exponential moving average. So this gives us again some more hints to the upside. Now there may be a potential of a pole and then flag pattern. So if it does come down, it break out of that flag area, then you are looking at potential to the downside more. Okay, now here, as I think I have also mentioned to you guys at the time that we have not seen this area, that this is a Z-like pattern. It's quite a nice Z-like pattern here. Okay, this is how it looks like. Okay, and you see, this is a Z-like pattern. Okay, usually that's the A and then the B and then the C and then D. At the end of this bearish Z-like pattern, it usually comes down. So that is a downward move after that Z-like pattern. Now that AB equals CD, you can see that this is where prices stopped as well, coincidentally. Okay, it's quite a good ABCD pattern for a Z pattern, sorry. And usually what happens is that if I drag the B to C, the D usually ends at very close or on the dot of the 50 Fibonacci ratio, which it did. Okay, so prices went quite close and then it got rejected and then it came down. So this could be seen as a how do you call that, a successful Z pattern, and usually once it reaches the D area, it'll come down, correct? So when it comes down, it could come down to at least 50. 50 is your minimum. So you're trading from C to D on the upside, okay, somewhere in the middle, and then go up here, somewhere here, and then you take profit, correct? Then you could trade again on a sell from D to E, okay? And when you pull your C to D at about 50%, let's say, from where there, and you look at 50% here, that's your take profit area. Okay, that green line, the top green line there. Okay, so you're trading somewhere here, adjust that to a psych number, and you're taking profit here. I probably wouldn't wait until it reach all this area here. Above this top green line, I take profit there already. So that's how your Z pattern looks like. Okay, now for those who are wondering about the M and W pattern, okay, maybe an example here that you could see. Now I'll just give you a bit of a idea. Okay, now, all right, here for example, let's say first steps, you need to look at the ABCD first. Okay, now look at the downward move. Let's say I'm predicting, okay, I would like to first clear out all the noise via the horizontal line first. Okay, so we have got prices coming downwards. Now price started, let's say, downwards, correct itself up there, and then come down. Okay, so I would like to treat it as a ABCD first. Okay, all right, let's say here, let's say that's my A, that's my B, that's my C. Okay, I like this as my A, B, I like this as my B as well, or C if it is a C, but because of the rejection candle there, I like that to be there. Okay, so I've got A to B, let's say. Then if my C is around here, then it would I ignore all this one here. I'm just talking about this whole move. Treat it as a straight line. Okay, then I've got correction at the 50%, let's say the 50%. So what I do is I label that A to B. So I've got an A to B here. Okay, I like that it took the 50% there. It's not too bad. Okay, so highest point, right? Now I'll take that all the way downwards here. Okay, so my AB equals CD, correct? So I've got A to B equals CD, right? So that's just my ABCD. So what I'm saying is a potential price dropping to that area there. Okay, this is just based on the ABCD. So when you look left, you happen to look at some big movement, okay, from this area here. Okay, nice. From the bottom area here all the way up is an upward move. Now, if that upward move is combined with the ABCD, that would make out a reasonably attractive M pattern, correct? So I could see a potential there, right? Now, why did I take that as my X and not this one? It's just because I'm doing that for the first time now. But what decides whether I take that here as my X or this wick here as my X depends on Fibonacci. So if I pull X to A, I would like to look at my B point. How beautiful is my B point? My B point lands exactly on one of the Fibonacci. This happens to be the 50%. It didn't hang around in between. It actually right on the dot. So I'm happy with it. Okay. But what if I adjust the X and go to this here? It's still not too bad. It is still at the 50. Okay, but you've got the wick coming outwards and stuff. It's not too bad. You could choose this one here or this one here because it still touched one of the Fibonacci ratio, the B point. Okay, so I'll leave it at that. I'll leave it as the bottom part. So I'll leave that one there. Now, the next one, why did I do that? I do that because I would like to make this pattern as geometric, as harmonic as possible. Okay, that is why where the B lands and where the C lands in an M and W pattern, it's of big importance and very significant for me to know how harmonic that pattern is, okay, especially a geometric pattern too. So now after I've pulled my X to A, I've decided my X to be there because my B landed nicely on the 50%. So now if I pull my A to B, I could see that my C landed at the 50% as well, okay, which is quite good too, okay. But then I've got, I want to project my D point, okay. So I've got another way based on ABCD. Of course, AB's length equals CD. That's one way of projecting the D point. Another way is to pull your B to C, okay, because just now when I pull my A to B, it landed at 50%. Okay, because it landed at 50%, then if I pull my B to my C, I am looking for the 200 area. So 200 area is my second TP area potentially. Okay, so now I've got a zone. So what that means is I'm trading C to D to the downside. Now where do I enter? I pull my that one there, I turn that ABCD or convert that ABCD into a geometric pattern. Now this is where my geometric pattern is. So that centroid or that center point is where I would actually ideally go short on it. That's my entry point. Under 137.87, I want to adjust that to 0.70. I enter 137.70. I take profit somewhere here. I wouldn't take profit exactly here. I would like to adjust it based on the top line here, adjust it to second number. So 132.60 would be ideally my take profit area before reaching the 50 area. So 132.60 is my take profit. I could have sold a long time ago. 137.70 was my selling price ideally, and I take profit 132.60. That's how my M-like pattern would look like. Okay, so I've got that area. Now another way to make more zones for your take profit, to add more lines on here, is also to, once you have M or W pattern, you can always pull your X to A as well. Look for the 61.8 and the 78.6. 61.8, you see, this is where it is as well. So it could bounce off from there. Sorry about that, you guys can hear me? Okay, so I've got my 78.6, let's say, here. Okay, I ignore the 61.8 because it's just too far from all these lines here. Okay, I want it all to cluster in an area where the lines are not too far apart from each other, so it becomes a nice zone area. So I'll also pull my besides pulling X to A, I'll pull my X to C as well and look for both 61.8 and 78.6. Okay, so then I've got my 78.6 here. This is okay because it's not too far from the rest of the lines. I can still do it with 78.6 here as well, not too far. I mean, they're all symmetrical. They've got a nice balance of distance, not too far, not too near. So I like that zone. You can throw that away. You can throw the last one away. It doesn't make any difference, okay, because prices are here. Okay, I would like to just take profit above 133.00, above that slightly, 133.10 perhaps. I'll take my profit already, okay, because I've got that extra zone here. Now this zone here, you can then mark it like that, and that is my reversal zone as well as my TP. I TP here, but this is also giving you an idea where price could reverse in within that area to go up if based on an M-like pattern. Okay, so that's your M-like pattern there. Okay, so some would say, okay, it could be a W like this and up, but it didn't go up at all, it came downwards. So that's why we've started with an A, B, C, D. You look left, you've got a big movement up. That means that is that could also be an M-like pattern. Now another way is that you click onto the volume indicator here. You don't need to change the parameters. You click OK. You try to look at whether or not there is divergence as well. Okay, so here you've got a big move down, but then prices volume went up instead. Okay, then you've got a let me see, this one here up. No, you want to look at divergence here. This one, it goes down, but then this one as well go down. This one went up, this one went up, so no divergence. Usually divergence is when this is this volume here is totally opposite of this. Okay, like for example, this one comes down, but this volume going up. Okay, so that is a divergence. If you find divergence, usually your prediction would be higher in probability. Okay, so no divergence. So here, okay, it's not too bad. It's still working quite well as an M-like pattern, but the conclusion of it based on this pattern is that there is a potential for prices to come down to this area and then start to reverse. Okay, so I would have traded from C to D. Okay, of course, like I said, I crossed that out. That's my selling area. Under that, I take profit here. Once prices have gone above, I will start to buy again, because this M pattern is a bullish pattern, meaning that once it reaches here, it'll start to move upwards. Okay, guys. So that's for the GBP JPY. Any questions at all? Anything that you would like to ask at this moment of time? Any questions? Anything not very clear? This is for GBP JPY, guys. Okay. All right. If not, I'll proceed. If you've got questions, you can proceed to ask. Not a problem. So okay, and now we have got prices here at the moment. We're looking at gold. Gold is trading at 1356. 1356.36. Of course, we are looking at what's going on with USD. So USD JPY, USD crosses. Now the USD crosses, you would need to look into whether or not they've got depreciation in value. Now, for what we are looking at is a potential of the weakness of the dollar, so that might encourage more strength of the gold. Okay, so let's just look at what's going on. Let's look at it from a charts perspective or patterns perspective. Just give me a second. Let us just I'm just waiting for some questions. If you guys okay, give me a second. Give me a second, guys. I'm just going to answer questions. All right, guys. No questions at all. Sorry about that. I just had to sort out something very quickly. Okay, got it. So any questions at all? Everything clear so far? We're still looking into gold, what's going on with gold. Okay, but before that, I would like to clear off all the noise first, meaning all the horizontal line and everything else. Let's look at this potential here. Now, at this point here, what I could see, a potential of a cup pattern here. Okay, now this is where it has sort of played around a bit with some volatility of price, so that could be the mouth area. Now what I would guess would happen is for prices to play the up and down move but appreciate to come up to this area. Okay, and then once it does that, then it will go up, return, and then it would move upwards. So still a positive outlook for gold, more positive outlook for gold, and good potential, but it's just a matter of timing. Now this one here for gold, looking at prices coming downwards. Okay, let's look at this power of candles. Okay, candles are driven downwards. Okay, and when it comes downwards like this, I would like you to look to the left to look at whether or not you could find or spot a significant support area. Okay, so I go onto the 4-hour chart. Let's say it makes it a bit easier to look at it. Now there are some significant support area here close to the prices. Okay, so if I take that one here, that's the body of that candle there. This could potentially be a significant support area. Okay, so here is where you need to watch out as well for potential bounces and things like that, because that is your next obstacle there, and it happened to be at 1352 as well, and that's very close to the 50 number, 0.84, very close to the 80 as well. So that is quite a sharp, significant area to watch out for gold, because for those of you who are selling at this moment, that is an area that could pose as a significant support area where prices for gold might just jump up at that close to that area. So be careful. Okay, so and you're at the 1355 area as well, so 55 very close to the 50s area. Okay, so be careful. And here if you go on to the 5 minutes chart, we're just looking at short term first. You've got this very huge move downwards. There's a lot of pressure to the downside, and it's a very sharp move down, and the angle of it is also really strong. Okay, so we could see that it's a 6 o'clock type angle there. Okay, here this is just to show you what's going on here on the 5-minute chart. And again, prices coming downwards, you want to look at support areas as well very quickly, short-term areas as well. Whenever you look at prices coming downwards, for example, look to your left for or when prices have actually gone up, a significant push to the upside, that would help you to look into areas of support that may have been significant in the past. Okay, so this is important for you to do. Now here, if I go into my daily chart, I just want to get a bigger picture. When you want to get a bigger picture, you would need to then look into more, how do you say that, zoom out a bit more to give you that bird's eye view. Now, in the past, I've spotted that Z-like pattern here, if you guys could remember, okay? That's the A to B and then B to C somewhere there, and then, you know, downwards move. But let us redo this again. Now, if I take that A to B and I pull that one down, A to B, I would look to all this significant area of these Fibonacci areas. You've got the 224. Maximum would be from pulling B to C, the maximum would be the 2.61 area here. This is based on the principles of Z-like pattern. So if it does go up, it could go up to the 2618 area. Okay, so let's just do that. Okay, now that is an area that I could see it coming downward to and create or confirm this Z-like pattern. Okay, so it's due, if at all it's finding resistance at this area here for the goal. We're looking at the goal on the daily chart, because the problem now is we are finding significant resistance in this area. So it looks like prices struggling to go beyond the 1369.19 area. Okay, it's struggling to go above that. All right, above the 1370 area, basically, you can say it like that. So that 1369 or 1370 area, it's sort of a boundary for now, okay, for it to actually go above. But based on this pattern itself, this Z-like pattern, if I pull this one all the way up, usually if it comes down to, it could potentially come down to the 50 area here. Okay, I've used AB equals CD and I got that line, and then I pull the B to C, I get the 50. So that gave me two potential take profit area or two potential green horizontal lines as my zone. Okay, so this is basically it. Now let me just readjust that properly. Okay, all the way up. There you go, from the highest point there. That point there is higher than that one there. Okay, some of the traders may argue that, okay, it's a double top and things like that happening, but I prefer to use this Z-like pattern here. Okay, I could turn it or convert it more into a geometric pattern, hence the reason I choose more harmonic type patterns as opposed to just chart pattern. This double top and the wedges and all these ones are classified or categorized under chart patterns and not harmonic pattern. Harmonic patterns are the ones like the lazy Z pattern or the 5-0 pattern they call it, the shark pattern, the Gartley, all kind of M and W's type categorized under the butterfly, the crab, all that comes under the what do you call that, the harmonic patterns category, because they all have some rules to follow based on Fibonacci, so they are categorized under harmonic patterns. Okay, the wedges, the triangle and all that, they do not have, they are more a visual type chart pattern that you don't actually have rules based on Fibonacci, so they're not classified under harmonic type patterns. So usually from harmonic type patterns are the ones that I trade. I choose a few that I like the Gartley or something close to the Gartley, the Z-like pattern, sometimes the shark, you know, all the decipher, the cipher pattern, all this kind of pattern, but I convert them into a geometric type pattern. Okay, so here we're looking at gold daily chart, potential for it to actually come downwards until this area here. So here is where I see a potential bullish Z pattern that is forming. So that's my A, B, okay, C, D. Once it reaches now it's it may be selling time for the goal, as I could actually see from the daily chart, but I'm not looking at it as a change of trend trend. I'm looking at it as a correction. So it may make a correction here, come down to this area, and then bounce up. So for those of you guys who have entered gold buying on a big scale, thinking that you just want to leave it there and buy, it's still not a wrong thing to do, but it's just that you would need to make sure that you have significant capital that can actually sustain all this volatility and corrections and everything else. Okay, so as you can see, prices now on the daily chart, it's looking like the bearish type candle is dominating, and you see that it's coming downwards. Okay, so once it comes under the 1350 area, you can see that got more chances to come down. But this ABCD type Z bullish Z pattern with the ABCD, the D usually ends there, and then that is where it ends in this zone, this area 1231 to 1210 area, a potential reversal zone as well. This is where prices could potentially reverse as well. Okay, so that is your Z-like pattern. Okay, a bullish Z-like pattern, but on the way down for now, and potential to go upwards after it has made that. But again, it may also go up even more first. So hence the reason I would like to use a Fibonacci to give you the alternative scenario. If at all it reaches higher, it may reach to this area here as well. If at all something is pulling it or pushing it even higher due to the dollar's weakness, let's say, for example, then it may go up to that area there. So let's give it some room. Let's see how is it actually turning around, whether it's turning around nicely. Let's look at how is it turning around or reversing, whether or not you have got candles that are giving you an idea that they are reversal type candle, whether they are the ones that has the long wick like I told you, or you've got engulfing type candle. The bearish type candle is bigger than the candle on the left like this one. Let's wait until we see whether this bullish candle, this bearish candle has can actually encapsulate or cover that bullish candle, and then you've got more bullish candle after that. Then you've got a bit of a signal that more selling is taking place for the gold. Okay, I hope that's clear for you guys on the gold. I just want to look very quickly onto the oil as well. I mean, quite a number of traders have actually asked about oil. Oil is getting cheaper for some reason because of oversupply, because of production as well, still going on and on. They have not found a way to really understand the potential demand that can meet up all the production and the supplying, but a lot of rigs are being built and everything else. So I think they are building the demand. They may be hiding some demand. Maybe the price of oil will go cheap, and then after that, it'll just burst up again. So there are potential for the upside. Here itself, visually, you've got a bit of a W-like pattern, so it is on the way down again still. Okay, so look at that. It has actually gone down already, quite a lot. That is a sort of rejection candle as well. Okay, now here, this rejection candle based on this is 5-minute chart though. Okay, this is an example I would like to tell you, is that this long candle rejected the downside, rejected the oil prices to go down further. That's what it meant. So I see a potential for it to start moving upwards now. Okay, but this is based on the 5-minute chart, but based on trend and let's see. Okay, here is what we could see. That's Z-like pattern, movement. But again, I see that you've got lots of fall here based on the 4-hour chart, but you've got a very significant support area here, right on the dot, 38.97. So if it does come down more, it comes down to this area at 38.97. There's a potential for it to move upwards. It makes this very nice upside down cup there. So you've got some bullishness expected from an upside down cup here going upwards. A channel up is actually expected, okay, for the oil. All right, so there you go. loads of downwards, down, up, down, up, down, up is you know, a good potential at the time to trade your ABCD coming down as well. Okay, let's see. So that's for your oil, guys. Okay, oil, watch out for that 38.97, maybe a potential. As you can see, is various very significant support that has pushed price at that level. Okay, on the 1 hour chart, apart from that level there is also a chance for a flag pole pattern here too. Okay, you've got a pole there coming downwards, you've got a flag up pattern, a channel up that makes out the flag of that pattern, of that pole, and then you've got a potential for it to break downwards. If it does, to actually look into as much as this pole area here. Okay, I think I've got some question. Veronica would like to look into USD JPY. Yes, of course, you may. Give me a second, Veronica. Let me just go on to USD JPY. All right, let's see what's going on with USD JPY. Can go on there. All right, I'll just erase that. Okay, so starting with the 1 hour chart. Okay, look at price concentration. Look at how it's moving. It's, you know, it's I mean, just visually itself, it's about time for it to pick up. It's looking like it's picking up, but it's got challenges here. Look at how you've got a rejection candle there. Tried to pierce through. It's just playing around on the downside, so it's signaling some form of a downward movement or downward momentum at the moment. Okay, but it's mainly due to the position that Japan is in. Now Japan is into the position of pumping more money as well. Okay, but the money that is pumped in will be less than what was expected, so it is still going to cause a bit of a upward strength. Okay, bullishness strength for the yen. Okay, so that is why it's weakening the dollar against the dollar. It's weakening, it's strengthening against the dollar for the yen, but the dollar, US dollar, is weakening against the yen. So when we look at that, that gives me a signal that it's tried to go upwards, but there may be a potential for a downward move. So we need to look at whether you've got some rejection candle that starts as well. It's also quite far away, you know, from all these three candles. So I'm looking at more to the downside sort of move for the USD JPY, potentially to the 100 area. Okay, because now it has gone under the 50. Okay, so 101.40, let's say, if it reaches at 40 and then it goes lower and lower, that means it's it has actually you know, signal more downside type momentum. Okay, so if I go on to the 4 hour, let's say the 4 hour chart, just want to look at here, you could see that you've got, you know, more room to the downside again, because it's under all the three moving averages as well. Okay, so let's say, just want to look at here. Okay, we've got more and more movement. We've got 101.45 now. Okay, so it is actually moving under the 50. Let's see it from a bigger perspective. I mean, for me, it's looking quite easy in a way to look at more downside move, but on the daily chart, it's just that you would need to really be careful on this area. Okay, because you got support here, it might find support there, and it might go up, but it might make that cup like this is the upside down cup. Okay, it may make that upward channel up, but it may make that channel up, down, up, down, up, down, up, down, and then you've got bigger fall. On the daily chart, as I have sent you guys in Telegram as well, it is still an upside down cup, and I still see a potential of an up down move, volatile maybe in an up channel format. But overall, I see it a big move down, as well. This may be also driven by Japan's position. Okay, it's really a mess. It's you know, from what's going on in Japan at the moment, the NIRP, or negative interest rates, not really working for them. They are actually, you know, battling as well with how things are working. It's not really working for them, the negative interest rates. They are trying not to be expensive, but they have no choice to make it that way, so they are doing a lot of other things behind the scenes with their banks, and how they hedge, and how they carry trade, and how they do their foreign investments as well, and all that, just to keep everything afloat. But they're quite you know, intelligent people to do that, and they've got a system they have run for many years to come out of problems. But you know, of course they go through a lot of a stock crashes and things like that. But any other country that is in Japan's position now may not be able to withstand it, because you know, the whole system is quite different. They're quite they've got a smart system in their financial and fiscal, so, but that does not mean it's the best thing that they have done so far. Maybe mistakes, but then how they're controlling it, risk managing it, and all that seems to be not causing, you know, too much of a fall at this moment of time. Okay, but from this perspective, this is what I could see, an upside down type cup. But look at that area here as the support area. Okay, because like I said, you know, you see price falling, look to the left, look at where prices have actually shot up from. Okay, so let's see. Okay, so this is it. Veronica, you want to go to your left. Okay, this is based on the daily chart, of course, and you want to look at, see where prices, this is where prices are, prices at this moment, and this is where loads and loads of support and all this sideways trend. So you need to draw a zone here, okay, based on this candle, let's say, and its wick here. Okay, so that's one zone on the downside. On the upside, I have got that area there, let's say, or let's say we play with this area here and there. Okay, you can always move that one downwards, so you get a bit of a narrow sort of channel that is significant. Okay, all right, so you've got that area. See, you can always move lower if you want to, it's not a problem. We can always do 3 lines if you want. Okay, so there we go. You've got that zone there to the upside, you've got that zone there as well to the downside. Okay, but this is what you need to really be careful of. I want to also mark this one. So, you know, these are zones that I think you would need to look at carefully. Okay, see, I've drawn that based on previous prices, previous turnaround of prices, support, resistance, and then we get prices finding support exactly there. You see, so this is what I'm talking about. When you get areas like that, you can map out what's going on. So you've got potential support coming through, then you got resistance here. So if prices were to go up, of course, then you find it coming down from this area here. But if it does come above all this and all the way up, then you've got chance from this area to that area to trade. Okay, so yeah, this is basically it. Now I can always use that zone there too, okay, because this is where prices have fallen, and that zone there. So again, we have got more zones now here. Okay, and maybe even this one here. Right, so when I mark it out or draw, map it out, I can always map that out based on zones like this. Okay. Okay, so this is actually quite a powerful technique on its own, where you map out your resistance, significant resistance support zone, and you could literally trade in between that itself, but you would need to go to shorter time frame and do that, and be able to trade just within the zone, you know, because you know your area, you've marked that up mark that out. So here we go. But this is based on daily. You can do the same thing in the shorter time frame, 5 minutes, 1 minute even, 15 minutes, it's entirely up to you. So you can see how it found support, you see. If it does go up, you can see it may find resistance there, so you exit there. Once it goes above the 10310 area, and then you buy, let's say, and then you make sure that you exit again before it enters that blue zone. So you've got this as your trading area, the black area, and you've got another black area for trade. Okay, so that's what's going on with USD JPY. So we need to look into prices as well. 101.34 area, make sure you are aware of the 101.50 area, because the 0.50 area is your psychological area as well. Okay, all right, let's see. Once you zoom out, you get an idea. Very strong resistance here, potential support. Yeah, goes up. All right, so that's basically it. Okay, so yes, any more questions, guys? How you guys are feeling with that? You got resistance here, but you're trading in between if you want to. Okay. Go to the shorter time frame if it's not too clear picture, and trade it in stages. Okay. Let's see. There we go. On the 30 minutes, you see it's finding resistance close to the 30 moving average, but close to the 100 moving average here. Okay, but looking at price itself, it's close to the 0.50 site number, 101.40 something now, about 41 or so. So 101.50 is your psychological level. Okay. All right, guys, we did go through a few pairs, not as many, but potentially okay. Okay, as you can see, you got turnaround here. You notice that prices for the USD JPY actually turn around very close to, in different time frame, it turned around from different moving averages. Okay. All right, guys. Wonder whether you guys have got any questions. If you do, you can always send me an email or communicate with me via Skype if you have my Skype. If not, Telegram, WhatsApp as well. Okay, with any questions you may have with your trades. Meantime, I would like to, end this session here. Before that, I would like to say a big thank you to you guys for attending this webinar, and I will see you guys again Monday. I just want to remind those who are with me today that I'll put that on Telegram as well. I'll be on holiday from the 13th, and I'll be back only the end of August, so I won't be available for any webinars as well. I'll be in Greece for holiday with my family. So yeah, I would be happy to answer your questions via email or via WhatsApp if I do get the connectivity. Okay. All right, let's see. Questions. Yeah, thank you, Veronica. Thank you very much. Hope you guys too. If you guys going on holiday, hope you guys have got a good holiday too. Okay, so yeah, thank you guys. Have a good evening, have a good night as well, and we'll see you guys again soon. Okay, take care. Bye-bye.